Welcome to 3 and 3. Today we're going to be talking about equities, fixed income, and 2025 risks. So equities. So the 2024 performance was fantastic for the S&P at about 25%. The Dow Jones Industrial Average was about 15%, and the NASDAQ was around 26%. 2024 was a great year for equities driven by solid economic growth, falling inflation, the Federal Reserve interest rate cuts, strong corporate earnings, and AI-sparked big tech gains. The 2025 outlook. Analysts expect many of these tailwinds to continue in 2025, driven by a broadening market, a rotation into other sectors outside of technology stocks, more M&A, mergers and acquisitions, because potentially of an easier environment, and clarity on the Fed policy. We know where the Fed wants to take the policy going forward. As you look at this chart, you can see the outperformance of the NASDAQ with those big tech companies over the S&P and the Dow Industrials Average. So fixed income. In 2024, fixed income was a tough year. The bond aggregate index, AGG, did only about 1.3%. Treasury bonds with GOVT ETF was about 2.95, and municipal bonds only did about 1.26%. For bond investors, performance was muted with small gains driven by the Fed policy changes that contributed to a roller coaster year for fixed income, and the potential for a policy change when it comes to Trump in regards to tariffs. So in 2025, analysts expect a combination of relatively high current yields and lower interest rates ahead, which may deliver more attractive total returns for bonds in 2025. And you can see at this index chart of the indexes that the market was very volatile. Up until about October 2024, we saw a pretty good rally coming out of the lows of April as Trump was expected to win the presidency. So 2025 risks, inflation reacceleration. So historically, inflationary cycles tend to have multiple peaks. And there are often long lags between these peaks. It could mean a premature end to the Fed's interest rate cuts, or even for it to take rate hikes again, a shift that could spook investors. Geopolitics could disrupt the policy of both goods and workers. And events could be new tariffs or conflict overseas, like in the Middle East or Ukraine. And of course, the Washington policy uncertainty. The biggest question mark for markets and the economy in 2025 is undoubtedly the path for policy in Washington. President-elect Trump campaigned on sweeping changes, including tariffs, tax cuts, and deregulation. But it's unclear how those promises will translate into action. As we look at this chart, we're looking at CPI versus core CPI, and the trend has been down, but it hasn't been going toward the Fed's 2% target here recently. So if that target starts to come into play, we could see those rate cuts, which actually would help fuel the market going forward. Thank you for joining us for 3 and 3.